Good day, all. I'm back again with the second in the series about uh, the model that I want to be sharing with you at the end of this series. So I'm going through the components individually that will bring together the entire idea. And at the end of it, I genuinely hope that it is something that you can literally take and apply to your trading immediately. All right, so today we'll be speaking about the power of three. This is not a new term, unless it is that you're new to trading and you're just hearing this for the first time. You'll also hear this referred to as AMD, or accumulation, manipulation, distribution. And we'll get into that in this video as well. So PO3, what does that mean? It refers to any candle in the chart. So I'm going to be going over like what the components of the candle is, and that will help to bring a better understanding as to how a candle is formed every time you see one printed on the chart. So for example, if candle is bearish, you'll have the open, the high, so the open, high, and the low, and the close. Similarly, if you have a bullish candle, it will be an open, low, high, and close. It's as simple as that, but obviously navigating our way through that in live time is where we need to train our eyes to be able to trade within a candle at best. So I think it is important to be able to understand how price behaves and moves and the patterns that it creates while all of that is happening on a macro or micro basis. So we all know that price is fractal, and whatever is happening on a higher time frame, the exact thing is happening on a lower time frame. So the micro will mirror the macro and vice versa. So for example, the daily candle opens at 6. Some persons will have it as 5 p.m. on a daily basis. Most times it is a period of consolidation up to 12 a.m. So that's the Asia session. And we refer to that as the accumulation session for the day. And remember, this is on a daily macro level that we're looking at it from. Volatility then comes into the market at 2 a.m., which is the London Open. And especially on forex currency pairs, you'll find that the high or the low of the day will be created at this particular time, or in the London session between 2 a.m. to 5 a.m. And this is where you'll find the manipulation occurring to sway traders to go in a particular direction, when in truth, price is actually going in the opposite direction. And that's how the high or the low would have been created for that day. The New York Open comes at 8 a.m. and you're either looking for a reversal or a continuation of the trend of the candle coming out of London session. And then at around 3 to 4 p.m. each day, the market closes off and you have the close of that candle, which is the consolidation or accumulation for the day, for the last part of the day. The New York session generally gives you the distribution phase of the candle. In truth, though, some candles will not be as clear-cut as this, where you have an open, high, low close or open, low, high close. You'll find that some of the candles will be a doji, where it opens, the same place it closes. And you'll find candles that are not full-bodied candles. They have more wicks than candles, so the open and the close may be close to each other. So it is in studying, backtesting, etc., that you'll be able to understand how to navigate those types of candles. So it's not always as clear cut as this, but for the most part, you're looking to trade these type of candles that are giving you a straightforward accumulation, manipulation, distribution, power of three, open, high, low, close. All right, so if you're a scalper, if you're going to be looking to trade, for example, just a particular candle, you're going to be looking to trade the 15-minute or the 1 hour candle, and then you'll be done for the day if you're scalping. If you're looking to trade intraday, you can look to trade the 4 hour or the daily candle. I will show you examples of these as at the end of this presentation. Swing trades can be done through the weekly candle. I'll also show you how that can be done. And by understanding how many lower time frame candles are in a higher time frame candle, you can follow the price action precisely and know if the trade you're about to take or have already taken is going in the right direction. So for example, we know that the 15-minute candle is composed of 15 1-minute candles or 3 5-minute candles. The 1 hour candle, we know that it is 12 5-minute candles or 61-minute candles. So you would, I'm not, well, yeah, sometimes we have to literally count the candles, but I'm not telling you to get that granular with it, but basically you'll be able to follow price based on what you're seeing in terms of the accumulation or the manipulation, and you'll know which phase you're in based on what is happening as the candle forms. But you'll have an idea as to when the candle should close based on the candle that you're trading. So if it's a 15-minute candle, you're looking to take a trade at 9 a.m., you know that at 9:15 that candle closes, etc. So yeah, you just bear time in mind, and so that you know exactly what you're doing. So I'll go to the charts to show you some examples. I'll be showing you some daily formations and weekly candle formations on the Euro USD. Okay, so I went ahead and drew up the chart just to save some time. All right, so let me start here, weekly. So this big green candle, or sorry, this big green line, vertical line, shows us the open of the weekly candle. So you just basically drop it on the candle. I'm going to go to the 5-minute chart, and we're going to just look at how the weekly candle would have played out for this past week. So what I did was, you would have seen me do this before in the previous video, where I annotated the high and the low of Monday. This would have been the open of the week, and we would then be looking to take a trade from one end of the range to the next, depending on where price goes first. So remember I said the open of the candle is usually the manipulation phase, and then we are going to be looking for the manipulation outside of the range. This would have been the first opportunity for a trade, and this would have fallen in New York session, and this would have given us a really great trade back if you're looking to hold until the next day, because you're really looking to trade to the next end of the range, which is to the high of Monday, seeing that this manipulated the low, and we'll be looking to trade back the full range back to the high of the week, which would have been Monday's high. We got a second chance here, which I think would have been the actual better trade in my opinion, based on the range that we got. But same idea. So the open, this is definitely manipulation. So this is one of those candles where you have it manipulated low and it manipulated high, it manipulated on both sides of the range. But we can take advantage of that opportunity, as it is an opportunity that has presented itself. We can trade both sides of the range. And so here, the timing, I don't think, well, we can trade in the afternoon, but I don't think it's the best time of day to be trading. So I would have waited until I would have allowed price to play out, but definitely this is the manipulation phase of this portion of price. And the better part of the trade would have come in the New York session, whereas we see price did a waterfall, and it would have been a beautiful trade back to the end of the range, or even to the low of this previous manipulation phase. So the idea is we allow money to play out, we look for the manipulation outside of the range. We use whatever, what would I say, confirmations that you use to tell you that price is reversing within the time that you usually trade, and you wait for price to confirm that it's reversing, and you look to take the trade back to the end of the range, the other side of the range. Same thing occurred here. We see price go outside of the boundaries of the range. We look, we wait, we look for the confirmations to tell us that price is reversing, and then we take the trade in that direction where price is going. It tends to play out this way most of the times. As I said, there are the candles that are dojis that will open low and close right back in the same place where they started. So we have to be careful with those. But at the same time, you're looking to trade the best trade setups. And so you're waiting for the more ideal setups that will present themselves. And you're waiting for that candle that gives you a straight accumulation, manipulation, and distribution phase. All right, so that's for the weekly candle. If we're looking at a daily perspective of the candles, let me remove this purple box just for clarity. All right, so in this case, we're going to be looking at the Asian range for each day. So that's the accumulation phase for each day. So we're looking for the manipulation outside of the range, which would have occurred around, I think this is in the London session, after almost 4 o'clock, after 4. So we get that manipulation outside of the range, and then for the rest of the day, price fell. So this would have been a bearish candle on this day. And same thing here. Obviously, this is the news. So when you have like red folder news on the day that you're looking to trade, most likely the high or the low of the day will be created during the news event. And remember, we trade after the news, not before the news. Even though there could have been a short trade here in the early parts of London session, because there was a manipulation outside of the range and a trade back to the lower end of the range. So that could have been your trade for the day. And if you're avoiding the news, then you'd have left New York alone. At the same time, there still would have been a trade here, because this is still manipulation outside of the range of Asia. And that would have been a very short trade, but I don't think that this would have been the best trade to take. Similarly, on this day, we had the accumulation. It's always clear what the accumulation phase is. Asia is always as a range of price. There are no real dealing ranges in there. And we have manipulation outside to the low. We look to trade back to the other end, depending on what risk-reward ratio you're looking to take or what your targets are for your trades. Then you can set them accordingly. I'm not telling you to catch the entire range for the day, but you use your criteria to enter and exit as you choose. Same thing happened here, but in this case, we had a candle that opened and never gave any manipulation. So you would have a candle with no wick at the top, and prices fell off for the rest of the day and then closed. We had same thing here. There was no manipulation outside of the range. So the candle opened, went down a bit, and then just went off and then tapered off for the rest of the day. But the ideal trades would come from the price action that would have given you manipulation outside of the range, not within the range. And because that way you would have been sure of the stop hunt, the liquidity sweep, and then you would have known that there's nothing else left for in terms of liquidity to look for here. So definitely price is going in the other direction. So we don't want to be the liquidity. We don't want to become a part of the people who are being manipulated. We want to be on the other side where we are the ones trading after the manipulation and after the stop hunts. So to be clear, and just a short recap, we're looking for that accumulation phase, which is the open of the candle. We're looking for that manipulation phase, which is the high or low of the candle. And we're looking for that distribution phase, which is the body of the candle, and the closing of the candle will be the other end of the week. And it is as simple as that. You can apply it to a daily intraday trade plan, or you can, if you're looking to trade the weekly range, you can use Monday as that accumulation phase and look for trades outside of the range of Monday, back inside the range. I hope this was clear. I hope this was helpful. Of course, again, if you have any questions, please put them in the comments. I will be sure to answer. And then, well, coming with the next video, one more video left, and then I'll put it all together. All right, thanks for watching and have a great day. Bye-bye.